In today's video, we're going to focus on the specific phases that we see in Bitcoin's market cycle, starting from bearish to pre-bull to first bull and second phase in the bull market. We'll be talking about these phases in a lot more detail, as well as the previous chart, which we've seen develop since 2023 into 2024, and where could we head into beyond. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. So in 2023, this chart, we first made a video about it almost a year ago, really, where we saw consolidation in the pre-bull phase. We tend to see lots of sideways price action in 2023. That's a pre-halving year. We saw a lot of sideways price action in a relatively narrow range in 2023. In 2019, we saw this consolidation take place over a more wider range going into 2020. And in 2015, it was more at a accumulation range at the bear market bottom, and similarly in 2012 a accumulation range after that initial wave from the bear market bottom in 2011. Generally speaking, the pre-bull phase is the pre-halving year, where we see lots of consolidation within narrower ranges or wider ranges. The bear phase, which is probably the first phase I should have spoken about, is a downtrending phase where we see price downtrend for a year. And that simply is as simple as that when it comes to the bear market. But in a first bull phase, this is the halving year, where we tend to see finally some sort of recovery in price action towards the upside, finally going into the parabolic phase of the second bull phase, which we'll speak about in just a moment. In the first bull phase, this is the first macro uptrend where we see fantastic upside develop, but it's not exactly parabolic, although in earlier market cycles, 2012 specifically, we've seen fantastic upside at the end of that halving year. But in 2016 and 2020, you can see that this uptrend is impressive, but it really does get a bit more impressive in the parabolic phase of the cycle, which is the second bull phase in this chart. So you can see in 2012 going into 2013, because we saw this parabolic phase take place at the end of the year, maybe we don't need that parabolic phase during the year, but it does take a little bit of a time to recover from that initial wave of parabola into the second wave of parabola to get us to that bull market peak. In 2017, you can see that this really does take off in a parabolic fashion. Comparing 2017 to 2016, this is a fantastic uptrend in of itself, but 2017 takes it to another level, and the same thing can be said here for 2021 as well, where we saw a bull market peak take place as well. So it's during the second bull phase, the post-halving year really, where we see a bull market peak take place, and also the parabolic price action take place as well, a parabolic uptrend. So in 2023, we spoke about this video. We were talking about consolidation being the pretty much the mode, the predominant trend going into 2024. But in 2024, that we should see price start to increase a bit more. And indeed, this is what we started to see going into the end of the year, started to see a bit more price action and uptrending. And we've really been, for most of this year, seeing a bit more consolidation. And that makes sense when we take into account a halving year. After the halving, we tend to see pulling back and sideways price action. We've seen this as well in 2020. And in 2012, for example, we saw that as well, but it did precede parabolic price action. So if we are to really talk about all these halving phases, after the halving is initially that pre-halving rally and then consolidation for multiple months. Same thing here, 2016, pre-halving rally and then retracing consolidation. 2012 as well, we spoke about, and the same thing here as well. We see a pre-halving rally and then pulling back for a long time. But this is going to enable the next phase. But in this phase of the cycle, this is where we're going to start picking up from this period of consolidation and pulling back after the halving. We're going to start picking up slowly in the uptrend as we see across time here. And this is probably the most extreme form of how we can start to pick up. We probably won't see this level of parabolic price action this year because this was an earlier market cycle, but definitely we will be transitioning into the most parabolic phase of the cycle where we start to lift up and ultimately see price top out in 2025. Just like we've seen in the past, this is where we see the tremendous gain take place, parabolic price action to new all-time highs and beyond, and enjoy a few months of price discovery where Bitcoin tries to search for a new all-time high before finally peaking in 2025. And these phases, it's really important to note, these phases are phases for a reason. So if we talk about the bear market, right? So this is bear market territory, a year of downtrending. If we go here, this is the bear phase where we see downtrending price action. This tends to be candle number 2. In candle 3, this is the pre-halving year where we see a lot of consolidation. So in this pre-bull phase, we're just preparing for that halving year, which takes place in candle number 4. And in candle number 4, we finally see a strong uptrend emerge. And that's essentially where we are right now. And the preparation for 2025 is ahead of us because we're going to see a candle 1 develop. And in candle 1, we tend to see a bull market peak finally occur. And in previous candle 1s, we've seen fantastic upside, but we're already seeing diminishing returns. So it's really important to take note of that. That candle 1 is that final upside year where we tend to see price slow down in terms of its upside because diminishing returns is a thing. But finally, we do reach that bull market peak. And this upside, it looks like it's starting to get spread over 2 years. So candle 4 and candle 1, candle 4 as well, into candle 1, because in the past, maybe candle 1 was where most of this upside was located, whereas maybe that's changing over time. But that's a digression. Nonetheless, these phases are really reliable because they're divided into 4 phases, which isn't a surprise because every 4 years we see a candle 4 develop, and every 4 years is the halving year. So every 4 years, a halving for Bitcoin's protocol occurs, essentially, and candle 4 is where this occurs. So every 4 years, we have 4 phases. It makes sense from that perspective. But currently, we are still in the reaccumulation phase after the halving. As I mentioned, we always see this sort of dipping and retracing in a post-halving phase. So if we're to do this just to evidence that post-halving phase, and this halving, for example, in 2020, this is that post-halving phase. Here in 2024, it's more like this, whereas in 2016, it's more like this. So the post-halving phase is where we tend to see a pre-halving rally, pre-halving retrace, and then post-halving consolidation and reaccumulation. And that is what happens across all halving periods. So if we're looking at this, for example, and we can compare 2020 with 2024, then just notice that this is the pre-halving rally, this is the pre-halving retrace, and then we see consolidation and reaccumulation until we finally enter the post-halving parabola, which tends to occur 160 days after the halving. Currently, we're 126 days after the halving, so we're really getting close to that breakout point in late September, because the post-halving reaccumulation phase tends to precede the post-halving parabolic phase. So we're just over a month away from a historical breakout point. History suggests it should be in September, but in the meantime, we tend to see ranges develop, or at least bargain buying opportunities below the range. So these orange circles just showcase to us that downside deviations and downside wicks below the range low of this post-halving reaccumulation range. Those represent bargain buying opportunities in preparation for a resynchronization of the range, before we break out into the parabolic phase of the cycle. So post-halving reaccumulation is called that for a reason. That price is simply reaccumulating for a few months, and this is going to simply continue as we consolidate here. But of course, we tend to see deviations, and this cycle has showed us so many times that downside deviations below the range low of that reaccumulation range tend to occur and represent bargain buying opportunities. This is of course changing a little bit in this recent 4.5 month period, 5.5 months, where we're seeing downside deviations occur in candle bodied form, but the bargain is still the same. And if history repeats, then 160 days after the halving is where we'll see a breakout in Bitcoin's price action from this reaccumulation range. So there's not much left to still wait for in terms of breaking out into a parabolic rally, and how this will look like in this term, well, we can only just do something like this to give us a better idea of what to expect going into the end of the year. You can see that maybe we'll still consolidate a little bit more, but near the end of the year is where we'll start to pick up, because going into 2025 is where we should see a lot of that upside also take place. So the end of this year, going into 2025, are going to be really exciting, because we're going to be transitioning away from that first macro uptrend burst, that first bull phase, into the second bull phase where we enter the parabolic phase of the cycle. We're really not that far away from this parabola beginning, and it begins with a breakout from this reaccumulation range, and we don't have to wait too long for that breakout to occur. Thank you so much for watching. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.